Hello again, fellow BeachBum traders. Welcome and thank you for joining us for our weekly trading game plan for the week of July 25th through July 29th, where we'll try to answer the question, is the perfect stock market storm coming? And is it coming this week? So again, thank you for joining us. Thank you, Douglas PC, for joining us for the live stream. And thank you all else for watching. Again, our weekly trading game plan for the week of July 21st through July 29th. And we'll get started. Okay, here's our Google document with our notes for our weekly trading game plan for this week. And you can find these notes in a Google Drive that's available to you. The link to this Google Drive is listed in the description box below, so you can refer back to these notes and also the notes from our previous weekly trading game plans. Good morning, Walter. Glad to see you. Thank you for joining us for the live stream. Glad to see you again. So we're talking about, is the perfect stock market storm coming this week? Well, we have three major events or areas that may cause the perfect stock market storm. We have the FOMC meeting Wednesday, I think it's Tuesday, Wednesday, the 26th and 27th. We're going to get the interest rate decision. The expectation is anywhere from 75 basis points to a full point. Again, yeah, it's Tuesday, Wednesday, and we can see that FOMC decision. Typically, they release a statement at 2 p.m. That gives us the interest rate decision. Then at 2:30, Powell will come out and start talking. So again, that's one of the major factors that may be coming together for this perfect storm this week. The other thing is we're getting the quarter two GDP data and on Thursday, and the expectation is, at least my expectation is, that's going to show that we have been in a recession, a technical recession at least, which is 2 quarters of declining GDP. We've already had 1 quarter, and my expectation is that this will confirm that, yes, we are in a technical recession. Now, there is a group that has to decide whether it's a true recession, and they look at some other factors. Again, I don't know that matters a whole lot. If it shows we're in a technical recession, I think the market's going to react accordingly. I think it already has. Good morning, Spacula. Thank you for joining us for the live stream. Glad to see you again. And the third major factor is earnings. So we have a ton of earnings, a ton of big earnings. We'll look briefly at the earnings calendar. So this combination of factors could well give us a perfect stock market storm this week. We'll have to see, but at the end of the video today, we'll talk about some strategies that we can ride out this perfect stock market storm if it happens to occur, whether it be this week or at any other point in time. So we'll go ahead and get started. And I'll bring up FinBiz. Again, these links are accessible both in the notes document for our weekly trading game plans, also on the links section of our beachbumtrading.com website, bum without the U. If you just scroll down, all of these tools are available in the various link sections. So FinBiz, investing.com, etc., Webull, all these tools that we'll be using are also available in the link section from our homepage for your quick and easy reference. So Friday was a down day. Most of the week was up in general for the markets, and it did a little bit of a correction on Friday. We could see the NASDAQ, which had been up, and we'll look at the indices in a second, but it had been running a little higher than the other two indices, and it took the biggest hit on Friday. One thing that's interesting is now we have a balance of companies that are above and below their 50-week moving average. So 51% are now above, 49% are below the 50-week moving average. So that's some progress on the upside. We can see most are still well below the 200 though. So, and we could see more made new lows, more decline, but that was just Friday. So when we look at the indices, we'll kind of see where we're at. Again, Friday was pretty red day in general. All your FANG stocks took a hit. Well, again, we're going to see they're coming out with earnings. Um, yeah, and a lot of it was the Snap earnings coming out saying digital marketing, is on a downtrend, etc. So all the other digital marketing companies took a hit coming out of that Snap earnings call. So we can see some news. We've still got some Russia-Ukraine turmoil. People are still debating whether we've had a bottom yet. And then, Friday we had a fall after a 3-day rally. We see oil, which had run up again, declined back down a little bit, and natural gas may be running back up to test its 52-week high again. And we could talk about some of the news causing that, possibly when we look at the futures and how we're going to potentially play that. Please, today we're going to do our market analysis. We'll look at our strategies, etc. And then hopefully everyone will come back tomorrow and we'll talk about the individual stocks, ETFs, etc. That we'll use to play these various strategies and trends. You can also see the treasuries decline back down under 3%. And although it was kind of odd on Friday that the bonds were going up and the stocks were going down, earlier this week, we saw that relieve some of the pressure on the tech stocks. So now we'll look quickly at the indices. We'll look at the SPY. So we could see a bounce in the SPY. It broke out of that declining trend. We'll zoom out in a second to the weekly. So again, it broke out of its descending trend line. It hasn't tested this previous high yet. So if we zoom out to the weekly, again, we can see it's still trailing below its moving averages, but it did make a nice little pop, possibly fill that gap a little bit there. A little bit of a wide doji candle, so a little bit of indecision as to whether it's going to go up or down at this point. But we did have a nice short bull rally in this otherwise bear market. So we still see it's tending to be a decline, tending to be a bear market. We've got lower lows, lower highs. It needs to go and retest and break through that moving average and through that high to confirm, an uptrending bull market again. And again, this week may be very telling. If we get this perfect storm and it causes a major decline, maybe we'll get the final capitulation that people have been waiting for to kind of call the bottom. So again, here's the Qs, the NASDAQ, very similar. We see a nice rally up, gap fill, still below its moving average, still trending mostly down. We'll look at the Dow. Again, all very similar. This one's a little more consolidated, a little tighter range. The IWM. So the Russell, again, they're all looking very similar. So they're all behaving very similar. Nobody's really breaking out, trending differently. We look at the VIX. This was kind of interesting too, is even when we had the declining days, the tendency of the VIX is to go up when the market declines. But we can see even on Friday, even though the S&P was declining, the VIX was also declining. So right now, if I look at Thinkorswim on another machine, the VIX is currently sitting at 2303. So it broke down below that 25 level, and now it's trending down towards probably the 20 level. However, given our potential for a perfect storm this week, this may be where we get a major a run up in the VIX. And you can see how when it runs, it tends to run up very quickly, and then it reverts to its mean very slowly, retraces very slowly. So again, given the potential for a perfect storm, we might see a run up in the VIX like this. Just a reminder, one of the ways you can play the VIX is there's leveraged ETF, which is long the VIX, which is UVXY. The leveraged ETF to short the VIX is SVXY. So position accordingly. And again, we'll talk about that even more in our strategies at the end of the video. So hopefully that gives you a good view of where the markets are currently sitting. Potential, which way they're headed, a lot of indecision. And again, the potential for this perfect storm, I think, will be very telling into which direction we go. If we look at the indices and the groups in FinBiz, and again, we have another video that's referenced in the notes that goes into how to use this groups tab in FinViz in more detail. And you can find our affiliate link to FinViz in the description box below. Again, this is the tool we primarily use for a lot of our market analysis. That Webull and a little bit of investing.com are the primary tools we use. So if we look at Friday, again, Friday was mostly down. The only things that were pretty much up were utilities, defensive, consumer defensive, and real estate. The tech sector took the biggest hit. The NASDAQ took the biggest hit. Energy was kind of mixed because nat gas was running up and oil, etc., was running down. For the week, you see technology was actually up, energy was up, basic materials was up, and utilities was down. So this was kind of a sector rotation. That's what I'm seeing is a lot of sector rotation back and forth between the days. One day energy's up, the next day energy's down. And whatever was at the bottom of the graph is now cycling back up to the top. So again, I think we're seeing a lot of sector rotation while the market's choppy. The big money, the smart money, the fund managers are rotating to try to get some yield, which is what you have to do, and that's not a bad strategy. So. We look at the month, we see energy, basic materials are at the bottom, and those were previously for the first half the biggest runners. We see technology was at the top, and again, it was at the bottom in the first half of this year. So if we go look at specific industries, just select industry there. We see Friday a real mix of some of the things. Healthcare, got a boost from the Amazon acquisition. And we saw some utilities, some REITs. Yeah, I saw several of the REITs were running. O was running. I think Stag got a boost back up a little bit. And we see, uranium went down. We'll talk tomorrow about our uranium trades. We made some nice money, and we'll talk about how we're going to play those again. What do you think we'll have with stocks at the who? To answer Specula's question about the World Health Organization labeling monkeypox essentially a pandemic, I don't think generally I don't think a whole lot will happen. I think those individual stocks that have monkeypox vaccines will run. But again, it's the numbers of cases is so dramatically smaller than the other pandemic, which I won't specifically name. But yeah, I think it'll be very localized to stocks that have vaccines, etc. And I think you guys, yes, I think SIGA's one. I think AEMD is one. I don't really chase those guys because again, I think it's a small. Relatively small occurrence. So if I look at the week again, it's a real mixture. We see some trucking, some solar, it's a travel again, very very mixed. Again, I think we're seeing a lot of just sector rotation. We see coal was down; it had run before. We'll look at the futures of gold and where it's turning in the futures in a minute too. And to answer your question too, Douglas PC, people just, they're over it. They're not paying a whole lot of attention. I'm not saying that's right, but I don't think there will be a major market reaction to that BA5 variant because I think people are pretty much ignoring it and they're kind of over it and they're not paying much attention anymore. Your Modernas, your Pfizer's, etc. will probably come out with a new vaccine, a new booster. But again, people aren't even paying attention now to the CDC's guidance for further boosters, etc. So I think people are they don't want to hear about it anymore. They're over it, and the markets aren't really paying much attention to it either. So we'll see, but that's my opinion. Yeah, and to answer your questions back, I don't think that's going to cause a panic unless something dramatic happens. And yeah, there's plenty of money to be made in the bear market. How long have we been talking about that? Since probably even back in December, but definitely starting the beginning of the year. Hopefully, everyone benefited from our attempts to position our BeachBum trading community for upcoming bear market, upcoming raging inflation, which we've been talking about for almost a year now, etc. So hopefully our BeachBum trading community has benefited and been well positioned. That is definitely our goal. So. Okay, so we'll look at the economic data from last week. Got building housing data. Again, this was kind of pretty much negative. It confirmed, housing starts was negative. It confirmed our previous thesis that the housing market's rolling over. And the data continues to support that thesis that the housing market's rolling over. If you want to chase this trend, one of the ETFs that we were watching a while back and it started to run is DRV. It is one way to play that downtrend. Now it's run quite a bit, so we haven't been chasing this again. And you see mortgage rates are going up, so you'll hear there are fewer buyers. People are slowly starting to cut their prices, so housing inflation is coming down because the buyers are disappearing. They're canceling contracts, and again, the selling housing inventory is going up. So again, the housing market as such has rolled over. This was interesting. The crude oil inventory went down, and that caused a run up in crude oil. Distillates also was down. And then refineries, gasoline inventories were up. And then on Thursday, we got jobless claims data. And you can see the continuing is a little higher than expected, which was not good. And the initial is higher than expected. So, again, we're starting to see the job market is weakening just a little bit. There's still plenty of open jobs, but I think, we're starting to see slowing hiring, closing of open positions, some layoffs, etc. So I believe, we're starting to see the lead. In my opinion, again, this is not financial advice. This is for educational purposes only. But my opinion, these are indicators that the start of the recession. So, and also these economic indicators was more negative than expected. The market didn't react as much as I expected to the negative jobs data and the leading indicators. Again, my opinion, these are indications that we're on the downslope of the recession. So again, that's my opinion. And welcome, Tanvir. Glad to have you in our live stream. Thank you for joining us. So then Friday, we also got this purchasing managers index. That's what PMI is. That's the buyers, people that buy stuff. And the manufacturing was a little better than expected, but the services was much worse than expected. So again, it's telling of the services area of the economy, which is a bulk of our economy. Going forward, these purchasing managers are saying they're going to buy less. So that should indicate a downturn in the services part of the economy, which again is a big bulk of our economy. So again, next week, and I'll jump over to investing.com in a second. We'll look at the full calendar, but the major events is the FOMC meeting, and starting at 2 p.m. Eastern time on Wednesday, we'll get the Fed statement. We'll see if they actually just stick with a 0.75 basis or a 75 basis point increase, or jump to a full point of interest rate hikes. Just my opinion. Again, I think they've telegraphed enough that they're going to do a 75 basis point hike, and I really don't expect them to go beyond that. I think they'll do a 75 in July. And again, we'll see the next FOMC. So we've got a break in August. They've got their Jackson Hole meeting in August. So I think they'll do a 75 basis point in July and then wait and see. If it's still bad, then they'll probably come back with a 75 or even a point in September if they really need to. Unless there's discussions, they really want to shock the market and go a full point. But I really don't expect that. I expect a 75 basis point. Not that really, in my humble opinion, I don't think that it matters a whole lot. The market's expecting something in that range, and I don't think we'll get a major reaction either way. If they go a point, some people might react a bit. So again, higher volatility, down, slide down in the markets for a day or so would not be unexpected. And then we get the GDP data on Thursday. So again, these things might combine to create this perfect storm for us. If this is negative, and then we get negative GDP, says, okay, inflation's still hot, which we know is true. So if they jump interest rates even higher and we're in a worse recession than people think or have thought, that might create our perfect storm. We may see a real severe downturn in the market towards the end of this week. How do I think and again, I think if they go a full point, some people are going to react negatively. The markets will go down, but I don't think it'll be a panic because it's kind of expected. If they go 75 basis points or a full percentage point, it's kind of expected. I can't foresee them going any farther than that. If they go less than that, that would be an interesting reaction. I'm not sure how the market would react. It might be negative because they say, oh, the Fed thinks the economy is worse than what we thought. And they might panic based on that. So. And you're going to see, to answer your other question about this little bullish action, going into this FOMC, I think we're going to see lighter volumes, positioning, people putting on hedges, etc. But I think it's going to be relatively quiet until we get this FOMC meeting, except for earnings. That's the third factor in our perfect storm. So we'll look at that in a second. Let me jump over to investing.com. So again, it's easy to get to these links from our homepage. So I could just go, okay, investing.com. And then I can go to the calendar, economic calendar. And I can go to next week. That NAHB housing data was very negative too. Again, says, the housing market's rolled over. Welcome, Captain Maddie. Thank you for joining us. Glad to see you again in our live stream. So we can see Monday's pretty quiet. We got a little bit of activity. It might tell us something about the economy. We got housing prices. Again, we expect housing to be downtrending. New home sales, again, downtrending. Certain more of these indices. Again, I would expect that to be very similar, downtrending. Mortgages, we know mortgages are going up. retail inventories, wholesale inventories. We'll talk about supply chain towards the end too. Crude oil, again, that'll affect energy. Energy's been very volatile, and I would expect it to continue to be so. And then we get to the FOMC meeting, the statement, the interest rates, and the press conference. Now, again, I think a lot of people are going to be listening to this press conference pretty closely to hear what Powell says. We expect them to be focused on killing inflation, not so much focused on the recession. So if we hear more concern about the job market than we've heard, or less concern about inflation, that may cause some market reaction. And then again on Thursday, we get the GDP and jobless data. So that's going to tell us more about where are we in this recession. Again, I expect them to confirm that we've been in a recession, and then we'll see how deep it is and what is the slope look like. Both of these things will tell us what does the slope of the recession look like. Are we talking shallow or are we talking steep and a steep drop? So then we get some core PCE data for June. And again, that'll tell us more about is inflation abating at all. So far, we have really not seen. People are saying maybe we're at peak inflation, but it's definitely hasn't abated any. Although we are seeing gasoline prices come down just a little bit. So. And then we get sentiment data. Now, the last Michigan sentiment was a little bit better than the previous one, which was the worst ever. So just because it wasn't as any worse than the worst ever, people got kind of a positive reaction. Oh, thank you very much, Captain Maddie, for that super chat. I greatly appreciate it. We really appreciate all your support. Thank you again. So then also in investing.com, just while I'm here, you can see the full earnings calendar. I'll show you in a second. I put the link to this in our Discord, in the Surf the Markets channel in our Discord. So you can see all of the earnings. There's tons of earnings. It's going to be very volatile. Again, this is the third factor in our potential perfect storm. We see Coca-Cola, etc. I'm going to bring up the Benzinga graphic. It's easier to see kind of the major ones. But again, you definitely want to go through the earnings calendar if there's anything that you own or that you're looking to buy, or that is if you own something in a sector of somebody that's reporting, it may have a sympathy play or in the same sector of something that you're looking to buy. Again, you expect a sympathy play like all the digital marketers took a dive when Snap reported poorer than expected earnings. And so did Twitter, but Twitter was a special case. Okay, so I posted again. I'm going to close investing.com for now. I posted that link and also the link to the Benzinga earnings calendar for this week in our Surf the Markets channel in our Discord. You can, if you're not in our Discord already, you can find an invite in the description box below. Also in our social media links on our homepage. And we post this market data out to that channel as soon as we're able to. Also the earnings report graphics, etc. So we've got a lot of major earnings this week. Again, this is the third potential factor in our perfect storm. We see Newmont, so we've got some gold, Whirlpool, Pet Meds, etc. Tuesday, we've got Coke, UPS, Microsoft, Alphabet, 3M. So, I mean, we're hitting all the sectors. We've got some, big major market movers. If these guys happen to report something negative, we know they're already laying off, right? Or they're slowing hiring, etc. So if they report anything more negative, that's going to pull the markets down. So again, that's part of our perfect storm. Is anybody that says anything that's unexpectedly negative, these big guys are definitely going to pull the market down. On Wednesday, we've got Meta, Ford, Qualcomm, Boeing, again, General Dynamics. So again, we're hitting all the sectors, Spotify. And then Thursday we've got Amazon, Intel, Pfizer, Merck, Roku. Roku's probably gonna. It didn't seem to get hit too bad on the digital marketing thing, but again, if they report anything else that's negative, that'll go down further. And then Friday we've got ExxonMobil, oil, major consumer defensive, P&G, AbbVie, Chevron. So again, major companies reporting earnings this week, and anybody that says anything negative, they're going to get hit, and then everybody in sympathy with them is going to get hit. So it's definitely worth paying attention to these earnings and also listening. You can hear it's not even just their numbers that are going to cause an issue. It's what are they saying? What kind of guidance? Somebody came out. I can't even remember if it was Snap or someone else. I think it was Snap said their Q3 guidance was poorer than expected. So going forward, if their guidance is lower, that's going to be a major hit. So yeah, it's a big week. Was it last week or the week before we talked about trading in the eye of the storm? And between these FOMC meetings and all this GDP data is what I considered the eye of the storm. Now we're headed into the backside of the storm, in my opinion. And I put, again, the subsequent FOMC meeting, so we see we get a break in August, so we might be back in an eye of the storm between July and September in terms of FOMC meetings. So we looked at the earnings calendars. We'll look at the market screen in Webull quickly. Okay, so this is the market screen on Webull. This is the online browser version. I also like to look at this for market analysis. Again, they're still running their 6 free stock offer. I do not know how long this will continue. Webull's our favorite trading platform. If you're not already using Webull, we'd highly recommend it. Right now, you can get 2 free stocks just for signing up, each valued up to $300. And then if you deposit any amount, even a cent, you can get 4 more fractional shares up to $3,000 each. So again, if you're not already using Webull, you might as well at least sign up, put a penny in, get your 6 free stocks. If you want to cash them out, you can. But it's our preferred platform for actually trading. And I see your question about playing earnings. Be careful playing earnings. Again, we've seen some pretty dramatic drops, 25, 30% drops on anything unexpected. So, be careful. And then, we see if they don't come out or it's more positive than expected, if you're doing puts or shorts or something, they're reacting pretty violently. So be careful. Be aware of when that earnings report is and play accordingly. You may or may not want to, hold across earnings if it's going to increase your risk. So if we look at advancers, decliners from Friday, it was a down day, so we see more decliners than advancers, mostly small declines. We see the outflows again. We saw the NASDAQ on Friday took more of a hit, but we see, outflows on Friday, not unexpected. Another nice thing about this market screen in Webull is you can flip over to the earnings calendar here, and you can see who's upcoming, near time, and it also has a estimate. So you can see, okay, who's reporting soon and what's the estimate, and then when they announce the number, you can see a reaction accordingly. And Captain Matty, you're asking about DCAing into Amazon. Yeah, if you think it's cheap and you want to hold it long term, that's fine. Again, it's hard to say what their earnings is going to drop on earnings, going to pop on earnings. So, it's not a bad strategy. If it's something that you want to hold, it's a shopping list stock for you and you think it's a good price, then that's not a bad strategy. So let's look at the best performing industries. I'll look at it for the week. Financial went bad, retail went bad, automotive, most of them, 3 to 4 out of the 5 days last week were positive. So most things are showing positive. Freight, renewables a little bit mixed. Solar kind of flip flopped a little bit. I think that was who was it? Manchin or one of the guys came out and said he wasn't going to support the infrastructure bill, some of the renewables factors in the infrastructure bill, and so that kind of took a hit on that, I believe. Yeah, Captain Matty. If your price target's a little bit lower, put a price alert in there, put it on your watch list. Yeah, it never hurts to get a little bit cheaper. Um, I know people say, don't time the market, just DCA in. It depends. How bad do you want it? You know, and what's the risk reward? I mean, measure the risk reward on it. If it's a $5 risk, then what's the potential reward? We haven't looked at Amazon in a long time. We swung it a while back, but it's been a long time. And again, it's our primary thesis is the risk reward just doesn't look that attractive. So if you're looking for slow growth, long term, they don't pay a dividend. So if I look at the ETFs, and I can't even remember. I think I did a due diligence on Amazon. I think I can't remember if I did it on I did it on our channel. So I do have a due diligence video out on Amazon, so you can hear my personal experience with Amazon, people I know that work there, and my ideas on Amazon. So if you're interested, I'd recommend searching for Amazon on our due diligence playlist, and you can hear, my thoughts on that. So market, okay. So down on the Qs, down on the Russell, and down on small caps. Again, not terribly surprising given the downturn on Friday. Down on the Dow, S&P, bear 3x. Yep. So again, not unexpected. All down. VIX short. This guy, that's interesting. They're putting it under the VIX category. BITI is short Bitcoin. So there are now two ETFs. You can long Bitcoin using BITO. You can short Bitcoin using BITI. So if you want to another way to play Bitcoin, and this is directly directly quoting Bitcoin. Now, I would advise you look at the profiles of those ETFs so you understand exactly what are they measuring, what index are they tracking, how is that moving. But if you don't want to buy and sell Bitcoin directly, you can long and short Bitcoin using BITO and BITI now. The short guy's pretty new, so it doesn't have a lot of history. So again, short the Russell, short small cap, and short the FTSE. We'll talk about when we look at futures, etc. When we talk about our ETFs tomorrow, we'll talk about some of the other global markets that we're starting to watch. So and potential opportunities in those areas. So industry is mostly red except utilities. All red. Again, this is Friday. Consumer defensives, real estate. So again, similar to what we saw in the sectors and industries in FinViz. And then we see, okay, natural gas up big. This was an interesting one. We'll see in the futures, palladium really jumped. Yeah, there's palladium again, 10. natural gas. Yep, softs down. Yeah, we'll see the commodities really. Most of them took a dive through most of the week, and then had a little bit of a bounce back in some areas on Friday. So again, it was kind of a volatile week in that area as well. So if you have NG, do you mean natural? Yeah, I assume you mean natural gas. We'll talk about how we're going to play that in more detail tomorrow. Um, and congratulations if you made a nice profit in using cold. Yep. That's, Again, it's been very volatile. You have to be a little careful because some of the guys like Benzinga, etc., they say natural gas is the widowmaker because it's so volatile, but that provides opportunity. You just have to be nimble and be careful, use a stop, etc. It has been very volatile. If you catch these run ups and roll over, you can make a lot of money. Um, Again, I'll talk about that more probably tomorrow is how we're actually going to play cold or maybe as in a second in the futures as well. So let's jump over to the futures in FinViz. Hello, KZ Auckland. Thank you for joining us in the live stream. I apologize if I get this wrong, but is Auckland Australia? So here's the futures. Again, we can see they made this run up. The futures actually, it looks like it's above. We're testing that peak, but now it looks like it's kind of topped. And they all then, so the Dow looks like it's kind of topped. Oh, New Zealand. Okay, cool. Aussies and Kiwis. I always liked Aussies and Kiwis. So the S&P looks like it may have topped and rolled over. NASDAQ topped and rolled over. Russell same. This was interesting. Again, we're talking about our global markets, and you see, the European stock market, the FTSE, was in decline. And we started watching. If you were getting our updates to our watch list last week, you could see we were starting to watch the European market because we kind of thought this decline was overdone. And sure enough, we got a bounce out of it. I missed that run up. And if you've been around our community for a while, I don't like to chase things, but hopefully, other people that are more nimble than I am may have caught that benefit. So we are watching these global markets again. We see the decline in the VIX. See oil had run up a little bit and then rolled over. It's back under 100. It ran up to 105, 106 at one point. Again, rolled over. If you're looking to play, again, we talked about natural gas, which you play up using boil and down using cold, KOLD. Similarly, you can play oil up using gush, or the WTI version of up is UCO, and short is drip or SCO. Now, gush and drip are on oil and gas companies, and UCO and SCO are on WTI oil price. So you can decide which one you actually want to track. Again, as we've talked about, gush and drip don't directly track the oil price or on oil companies. So again, I'll talk about this more tomorrow, but just to kind of answer your question, Captain Maddie, about how we're going to play natural gas is I'm going to play it off this top. If natural gas tests this 52-week high, I'm going to short more with cold. We have a long-term position in cold already, but I'm going to scalp it further if it peaks, particularly at this 52-week high. Maybe even if I see an exaggerated run up, or a gap up, and we'll scalp it short with gold again. I'm not going to chase it with oil at this rate. Um, we see gold hopefully is making an upturn now. If you're not already in gold, you can see it swinging back up. It's testing this previous high. Maybe opportunities. Our favorite opportunity is GLDI pays a monthly dividend. There's other ETFs we can look at tomorrow if you're interested in gold and silver. Again, we like these monthly dividend paying guys, GLDI and gold, SLVO on silver. You'll see tomorrow we were hoping to be able to get into USOI, which is the monthly paying dividend on oil, but it kind of ran away and didn't come back down yet. But you're going to see that on our watch list for tomorrow. Catching up on the chat a little bit. Guess you guys are talking about New Zealand, which is cool. I'd love to go. I've never been to Australia or New Zealand, and I'd love to see it. Gold royalties. Yeah, I think I added that one. Well, you'll have to take a look tomorrow, Douglas PC. I think I added that one to our ETF area. Here's the pop up in palladium. It reacted a lot more dramatically than platinum, but both of them swung back up. They were declining. I've been watching them, but the risk reward on the ETFs just wasn't quite what I wanted yet, and then they ran back up. See this huge gap up in live cattle and this pop in feeder cattle. I was asking around what the cause of that was. I didn't know if there was if the heat wave it was killing off cattle again in the Midwest, or I've also heard speculation that it was the price of cattle feed. So I haven't seen decisive confirmation of that, but we see these big run-ups. I have yet to find an ETF to be able to short that. So when I saw that gap up, I was looking for an ETF to short that, and I just don't know of one yet. Yeah, Spacula's top 3 best chat Discord moderator. I would agree. And thank you to Spacula for all his help, because it is challenging to keep up with everything simultaneously. So I greatly appreciate all your help, Spacula, both here and in our Discord. So we also see the dip in wheat. You heard the Russia-Ukraine deal brokered through the United Nations, that they're going to allow shipment of wheat from the Ukraine. So you see wheat took a dip. And then we see this crazy risk-off move in the treasuries yesterday. Tomorrow we're going to look at the treasury ETFs that we have and see if we've got any kind of play there that we can find one with a good risk reward profile that would allow us to play that exaggerated move in treasury. So I'm going to be looking at that in preparation for our part 2 of our weekly trading game plan for tomorrow. And we'll see if we can find some way that we can take advantage of that exaggerated move. We also saw, the U.S. dollar was just running crazy. It finally did turn around, and it caused, a bounce in the euro. We were watching to catch that bottom in the euro. Didn't quite get it, but we'll look for some kind of opportunity there. Same thing with the yen. You see it bottom and bounced up. So we've added a number of ETFs. You'll see again tomorrow. So that we can watch those foreign currencies and take advantage of opportunities that we see in those areas. So I want to quickly get to strategies so this doesn't get too long. Let me get a drink a sec. So, firstly, we want to talk about, how are we going to ride out this perfect storm? So, we talked a little bit about opportunities where you can long and short the VIX using UVXY and SVXY. Again, UVXY is the long on the VIX, SVXY is the short. We'll see when the VIX starts to perk up. It's interesting. It's been declining going into this week. Again, maybe people rolling off their hedges in preparation. You might see them hedge back up going into this week. Mondays tend to be more volatile in general. We may see profit taking again if people are leery about this data, the FOMC, the GDP data. We may see profit taking. We expect to see sector rotation. So again, let's talk about again other ways that we can ride out perfect storm. Again, you want to have your safety net in place, your stops, etc. Um, yeah, we can talk about Yang. I can bring that up again tomorrow. It's kind of in the middle right now, but we're keeping an eye on it. It's always an opportunity with Yang spec. Yeah, I prefer Yang again. I've also found another one, so come back tomorrow. I've found some other ways to play China. So. Also, I wanted to bring to your attention, it is hurricane season. So far, we haven't had a major landfall in the U.S. The height of hurricane season here in Florida is like September, October. And there's some stocks that when they have a hurricane form tend to run. Generac, these are generator stocks and electrical infrastructure related stocks. So just want to bring those to your attention. If we hear a hurricane forming, these are the guys that tend to start to run. So in full disclosure, we've been long polar since last hurricane season. So and it never did pop, but we'll hold on to it because it's just a matter of time. One of these times they pop. Yeah, copper's been down. Douglas PC on the recession fears. And again, I've been watching COPX, which is the ETF on copper. And we'll take a look at it again tomorrow. It's just not it's not giving me the risk reward profile that I want. So I'm letting copper go down further to get a better risk reward. And if you look at the chart, it has been much lower in the past. So. Some news items I want to cover quickly. I don't know if you all heard that truckers are protesting in California. They're blocking the ports. It's causing a backup of containers again at the California ports. And they say that every day they're delayed is causing a 2-day backup in the containers at the California ports. So essentially, what, in my opinion, my view in this is we're going to get one of these bumps in the supply chain again. Which means persistent supply chain issues and persistent high inflation because whatever's in those containers is not getting to the shelves, and that then causes higher demand. People paying more for like they did during the pandemic for toilet paper or other things that are in scarce supply, and then we get a glut of stuff at the wrong time, and they have to discount it or dump it to the discount stores. So we're continuing to get these bumps in the supply chain, which are going to continue to cause inflation and other problems. And then I saw also Douglas PC mentioned in the early chat prior to our live stream that China and Japan are selling off the Treasury, U.S. Treasury bond holdings in significant areas. And so that would cause a downward pressure on treasuries. And my opinion, my expectation is they would sell at the top, right? So since treasuries are popping, I would expect that to cause downward pressure on treasuries as these guys, if they want to sell off, they're probably going to sell off at the top. And at the same time, you've got the Fed selling. So there's a lot of downward pressure, and that's why, again, I want to look at any opportunities we can play on the downside of treasuries going forward. So I've got several ETFs. We'll look at them tomorrow and see if any of them present a good opportunity. And then we talked about last week the strong dollar and what that's potentially causing. And you've heard that come out in like even Apple's statements. Several companies, IBM had they had issues because with cash flow because they're making a lot of their money outside the U.S. When they have to convert it back, they're losing a lot of money on that currency exchange. So you're going to continue to hear that because of the recent dollar strength. Now it did turn down a little bit, but it's still awfully high. So again, companies making a lot of their money, Apple, Nike, IBM, any global companies, they're going to lose money on the currency exchange. So that's not something that typically we had heard in the past, but we're going to hear it now. So that's going to have a negative impact. We talked about retail last week. Also, I wanted to highlight this growth company issues. We continue to hear companies, particularly tech firms, they're either slowing hiring, canceling open jobs, or they're laying off. Um, you know, in various degrees. I think we're going to hear more of the same, and that causes a domino effect. Is okay, people they're buying from then are going to lay off, and they're going to stop hiring, they're going to lay off, etc. This is kind of how a recession goes, is you have this domino effect, this downward spiral, as companies slow, and then as these people get laid off, they have less money, so they buy less things, so those companies make less money, so you can see it's a downward spiral. And that's how we end up in a recession, and we're seeing all the initial indicators. Um, okay, just checking the chat real quick. So I'm going to try to wrap up. We're almost an hour in. If there's any last minute questions, if you want to throw them in the chat, you can always add them in the comments below. Also, please, join our Discord, throw your questions, comments, etc., in an appropriate channel in our Discord. Also, you can always contact us through our social media links, our Facebook group, etc. Please ask any questions you might have of how we can help you succeed in your trading career, and we'll do what we can to help out as we are able. Also, a couple final asks. We have a poll on our community page on our YouTube channel, and as to what's the best time for these weekly trading game plans. So please vote on the poll on our um, community page of our YouTube channel, BeachBum Trading. And also, if there's any other types of live streams, that was something I was thinking about, and I thought I'd throw out there to ask everybody, is if there's other types of live streams and other times that you would like to see live streams on certain topics, and maybe it's just a Q&A. If you guys are interested in that, please let me know what's a good time, what are good topics, and maybe we'll consider doing some other types of live streams. If you want to do due diligence on symbols, that's time consuming, but we can always look at doing some other types of live streams if y'all are interested. So my only other ask, and I know Specula and others have been very helpful, is please invite your friends. Share this with other traders, particularly if the other traders that have left, they got beat up in the bear market because they didn't know how to trade it, or whatever, they blew up their account, and they're interested, but they left because of the bear market or whatever. Let's try to get them back, and let's get them in our BeachBum trading community, and let's grow the community. Let's help each other out. We want to help everyone succeed in their trading career, succeed in trading. And this is in my opinion, there's a lifelong skill. Is you can make money trading any age, from anywhere, in any kind of market, if you know how. So that's kind of our goal. That's why we do this. So, um, let's share it with your friends. Let's grow the community. If there's anything that I could do or we could do to help that happen, please let us know. So again, any further questions, comments, etc., please put them in the comments below. Join us in the Discord. And we look forward to seeing you tomorrow. We'll go over individual stocks, etc. So I'm going to wrap up. Thank you again all for joining us, and we look forward to seeing you tomorrow, 10 a.m. tomorrow for part 2. And have a great rest of your day. Thank you. Bye.